Hey, this is Josh I with Market Prime Mortgage in Brandon, and I wanted to talk to you a little bit today about credit scores. So everybody's always asking, what can I do to get my credit score higher? What difference does it make? Can I qualify for this or that? I got an example going on right now with a current client who they're actually 1 point away from saving hundreds of dollars a month and thousands over the life of their loan. So I just wanted to show you a little bit about how that looks, what you can do to get your scores a little higher, and the importance of maintaining a good credit score and keeping it as high as possible, and showing you what the real dollars look like over time. So let's take a look. Look at these 4 loan options here. They're all the same loan, $399,000 purchase, 5% down. Where you're going to see the differences will be between the different credit scores that we're going to take a look at. So these first 2 examples is the first thing to look out for. 679, 5% down, gives you a payment amount of $2,790, $2,790. That includes your taxes and insurance as an estimate. But that 679 score is going to drive your interest rate, and it's going to drive your mortgage insurance premium. Okay, we'll get into that in a second. Now, if you were able to raise your score by 1 point and go into the 680 credit score bucket, that's going to save you $162 a month. You'll see your new payments coming in at $26.28. So that's $162 down from the $27.90 for just 1 point less. So you can see how big of a difference that makes. Now, taking a step further, boost your score up to 760 and above, and you're going to save $400 a month versus that 679 score. Same loan, you just get a lower rate, you get a lower mortgage insurance premium, and a better deal overall. So $23.90 versus $27.90, 400 whole real dollars in your pocket by having a credit score, less than 100 points higher than the 760 or 679 that you started with. Now, this fourth option is something a little bit different that many people don't know about, but it's definitely something to think about. If you are purchasing a house with a low down payment and you've got good credit, you can save money per month if you want to do this. So this is a lender-paid mortgage insurance option. You'll notice that the interest rate's a little bit higher than its sister option with the 5% down 760 score, 4.375 versus 4.125. A little bit of a difference in rate, but less money in payment overall. So the difference in payment here is about $73 a month. So sometimes that makes sense if that's what you want to do. You can go with a lender-paid option. You'll end up seeing how that makes more sense in the long run. Now, if you look over here, these charts are going to show you what it looks like over 36 months, what kind of savings you would have based on that 1 point in difference in credit score. So right here, you'll see the 679 5% down option is a baseline, so there's no savings there. If you could raise your score by 1 point and get into the 680s, you'd save $66.50 over the next 3 years. So a little more than $2,000 a year. That's what you would save by having your score 1 point higher. Get into the 760 bucket, now you're saving $15,000 over the 3 years. That's $5,000 a year for having a better credit score, and then even more if you go with that lender paid option, $17,000. So real money, real dollars. You can put that money to work for you, put it to use. What really makes a lot of sense here is when you look out over 15 years. This is the real long-term impact here. So we see that we have, if we pay interest and MI for 15 years, we're going to have $264,000 paid in over the next 15 years on our original option of 679 credit score. Now, just 1 point difference going up to a 680, just 1 point difference going up to a 680 would be a savings of $25,000 over the next 15 years. Okay, now you're talking about vehicles. How much is a car? How much is college tuition? How much can you add into your 401k or IRA over the next 15 years? That's an extra $25,000 that you could put in there. Now, if you could take your score from a 679 to a 760, and you're going with either one of these 760 options that we talked about before, now you're talking about saving $53,000 over the next 15 years, 180 months. Again, could that be college tuition? Could it go towards your retirement plan? Could it be an absolute dream vacation? Could it allow you to stop working for a little while? All kinds of different options you can do with that. So that's the importance, managing your credit and making sure your credit is in check. Now let's take a look at the details of mortgage insurance premiums. You'll see here on the $679 5% down option, the mortgage insurance premium is going to run you about $445 per month. That's a huge number. 1 point higher as a $680 gets you down to $338. Still a pretty big number. Going into $760 with outstanding credit, you're only going to pay about $128 per month. And then if you're on that lender paid plan, you're not paying anything because it's in the rate. So this is something to think about. You know, if you're a couple points away, we have some stuff that we can do to help you get over that hump and maybe save you $150 a month. If you're not quite there yet, give me a call if you have any questions, 813-448-1501, or email me at josh@marketprime.com. Thanks a lot and have a good day.